According to a recent Harvard study, more than half of all Americans are spending well over 30% of their income just on rent, with the median home price increasing by 60% over the last decade to near record highs of $433,000. It begs the question, why is the most fundamental principle of the American dream harder than ever to achieve? Known as the worst financial collapse since the Great Depression, the global financial crisis continues to leave severe impacts on the housing market, specifically when it comes to the supply of homes available. Throughout the early 2000s, interest rates were at 40-year lows and drastically increased the demand for homes. Investors also took advantage of this by buying massive amounts of mortgage-backed securities, or a group of mortgages and real estate debt that offered higher interest payments than traditional bonds. With the real estate market booming and the demand for these securities to continuously increase, lenders began to drastically reduce the requirements needed to purchase a home by targeting those that traditionally could not afford one, resulting in the widespread issuance of subprime mortgages, often with variable interest rates. By 2006, home prices increased roughly 87%. And the United States experienced one of the largest home construction periods in history, with more than 14.6 million homes constructed. However, through 17 consecutive quarterly meetings, the Federal Reserve increased interest rates to 6.25%. Many subprime mortgage holders saw their payments increase by as much as 60%. And as home prices began to fall, over 10.9 million Americans found themselves with negative equity. Some of the largest home builders began to file for bankruptcy, and home construction plummeted by over 50%. The government's Troubled Asset Relief Program, or TARP, allowed $700 billion to purchase of toxic assets and up to $250 billion in bank shares, saving corporations but not preventing the widespread economic fallout. Over 8.6 million Americans lost their jobs, and more than 5 million Americans were foreclosed on. During the financial crisis, the net worth of American households declined by about $17 trillion, a loss of 26%. And by the end of the crisis, 20 of the top 25 subprime mortgage lenders would close, stop lending, or go bankrupt. With a recession of that magnitude, specifically centered around the housing market, all focus shifted to how to end the crisis, rather than rebuilding for the future. From 2010 to 2020, only 6.8 million single-family homes were built, and roughly 3.1 million apartment units, along with significantly lower construction rates than in previous decades when adjusted for population growth. According to Freddie Mac, the U.S. currently faces a housing shortage of about 1.5 million homes. Unfortunately, as home construction was beginning to ramp up in 2019, it was faced with the 2020 pandemic, record material costs, and an increase in interest rates, which has made it incredibly challenging to not only build new homes, but affordable ones. According to the National Low-Income Housing Coalition, the U.S. is short 7.3 million housing units for low-income renters, with home affordability at its worst since 1984. However, according to Redfin, the luxury housing market grew 3 times faster than the mainstream market in the third quarter of 2023. But in reality, this is a result of a multitude of different factors. One of the largest impacts is the increase in mortgage rates, with more than 42% of luxury homes sold in the third quarter of 2023 having been paid for in cash. Another factor simply comes to the increasing costs of building new homes. According to 2022 data from the National Association of Home Builders and the U.S. Census Bureau, the median cost to build a new home was $449,000. And while for the most part, material costs have somewhat decreased, the baseline price to build a new home is simply out of reach for lower-income buyers. As a result, builders often target the luxury market, adding premium amenities and marketing homes as luxury products. Additionally, migration patterns have also influenced housing costs. When you look at the states that experience the largest influx of Californians, naturally you see a large increase in price for these states. What makes the situation more difficult is the substantial price differential between most parts of California compared to other states. And just for context, when you look at what type of home you are getting in California with prices near $1 million, what would be seen as expensive to those that live in Phoenix or Austin is seen as incredibly affordable, if not cheap, to those moving from California. Not to mention, about 884,000 people have left New York, where the median home price is around $830,000. This inherently creates not only a demand for more housing in these limited supply areas, but emphasizes a demand for homes to actually be larger with amenities that support the luxury home title. However, I would actually argue that there is an even larger reason to be incentivized to make luxury homes, and that is that it is just practically impossible to make affordable ones. Zoning has been an issue for affordable housing going all the way back to the early 1900s, where New York businessmen on Fifth Avenue were frustrated how their luxury high-fashion shops were becoming overcrowded by the garment shops and employees moving into the surrounding areas. So they enacted zoning laws that most major cities throughout the United States soon followed. In 1924, Secretary of Commerce Herbert Hoover supported government planning over free market urban development, leading to the creation of the Standardized State Zoning Enabling Act. Then in 1926, the Supreme Court case Euclid v. Ambler Realty gave localities legal authority to control construction on private property, initiating single-family zoning, with Supreme Court Justice George Sutherland famously writing that very often the apartment house is merely a parasite on the neighborhood. Even today, zoning laws still heavily favor single-family homes. Apartments are banned in at least 70% of residential areas in most major U.S. cities, with San Jose prohibiting them in 94% of its residential areas. And just for context, in 2019, Houston, Texas, the only major U.S. city to not have zoning laws, built as many apartments as Los Angeles, despite being half its size. Even with these extremely restrictive zoning laws, to get a permit to build new units or even make a small change on your own property takes roughly 6 to 12 months to get approved, and any attempt to propose and implement affordable housing is often met with NIMBYism, or not in my backyard, where individuals protest and use voting power to discourage local legislation.
What is your concern when it comes to Section 8 and low income?
The lifestyle, I feel like, goes with Section 8 is usually working maybe single moms or people who are struggling to keep their heads above water. And it's not, I feel so bad saying that, but it's not, it's just not people who are, I guess, of the same class as us, which sounds bad, but I don't mean that in a bad way.
Some people would say, look, they maybe have not had the opportunities that their kids are not going to have the opportunities that your kids are going to have in this neighborhood.
Right.
Can they share in that?
The problem with that is I hear a lot of the unfair of, we haven't been given this or not that, or we haven't been afforded things that you might have been afforded. I don't look at multimillionaires and think, why don't I have a yacht? Why don't I have a private jet? It's a mindset, I feel like.
Do you think that you maybe are stereotyping the folks?
Oh, I totally am, 100%. It's not, it works both ways. I'm definitely not a racist and I'm not bigot, but I think I hold a little bit of a stigma against people who are different. We don't want nomads, we don't want people who don't have roots. I just don't want that to be what my community is about.
Don't say anything, Squidward. Remember your karma. What?
Ultimately, I believe this boils down to the fact that we have forgotten what a home actually symbolizes. It's a representation of freedom and community and stability, and it is not just some investment. And in all reality, it's not like we're protecting centuries worth of beautiful architecture when the average subdivision and neighborhood just looks like this. Honestly, how many of us actually know what our neighbors' names are? But on the topic of investment, it's important that we break down where the affordable single-family homes are actually going. As millions of homes were foreclosed as a result of the global financial crisis, it provided a unique opportunity for investors of all kinds to begin buying single-family homes.
Thousands of homes on the market, listings on the internet show how a tragedy for many is an opportunity for others. Homes for as low as $5,000, and investors are scooping up entire neighborhoods.
As institutional investors still make up a smaller portion of real estate investors, that number is increasingly ramping up. And by 2030, the institutions may hold some 7.6 million homes, or more than 40% of all single-family rentals on the market. Texas led the nation in home purchases by investors in 2021, According to the National Association of Realtors, 28% of all homes sold that year went to an institutional investor, and more than a third of homes on the market in the Sunbelt area are now being purchased by private equity firms like Blackstone or dedicated single-family rental companies. Institutional investors are also what's pushing build-for-rent communities, which is single-family homes or multifamily dwellings that are intended specifically for renting. Since these have more amenities and conveniences that would be typically offered in an apartment complex, rent prices are being charged higher than the average national rent. And as we begin to see the impact these certain sectors have on the already limited supply of housing, it's important to break down the affordability of homes, specifically around mortgage rates. Following the pandemic, as the Federal Reserve lowered interest rates to help stimulate the economy, many individuals were able to pick up 30-year fixed-rate mortgages or refinance their existing homes at historically low interest rates. Nearly 38.5% of all homeowners don't even have a mortgage. 59.5% of borrowers have a mortgage under 4%, and even as rates began to rise, 78% of borrowers have a rate under 5%. This is what's causing a golden handcuff situation. Those that were able to lock down a low interest rate are far less likely to move, sell their home, upsize or downsize, as it would result in a massive increase in monthly payments. For further context, if you locked in a 30-year mortgage at the current median home price with a 3% mortgage, your monthly payment, not including taxes or insurance, would be $674 less than the current median rent, and $1,000 less than if you bought that exact same house at today's mortgage rate of 7.5%. And to afford a home priced at $402,000, Americans need a median household annual income of $110,000, up 46% since the start of 2020, where the median annual household income is currently sitting at $74,755, resulting in it being cheaper to rent than buy in all 50 states, with 21 U.S. metros having the typical monthly cost of owning being at least 50% more expensive than the typical monthly cost of renting. Now we come to the final bottleneck caused by limited supply with generational impact. The baby boomer generation is currently the largest generation of homeowners, controlling 38% of homes nationwide. Boomers are also living in their homes longer than previous generations. Gen X, while devastated the most from the global financial crisis, was the only generation to see positive equity on their homes due to their younger age and ability to still find work during their prime years. Most millennials were graduating high school or college or just beginning their career during the global financial crisis and emerged into one of the worst workforces, drastically hindering their ability to purchase a home. For Gen Zs, their biggest mistake was having a childhood instead of buying a home. For comparable metrics, last year, the median cost of a typical 20% down payment was 85% of the average millennial household salary. That's considerably higher than the 75% for Gen X and 64% for baby boomers when they were at the same age. And as this chart is a few years outdated, it shows a drastic shift between home price to income ratios in the last 40 years. According to Redfin, nearly 40% of home buyers who are under 30 received either a cash gift from a family member or an inheritance to afford a down payment. Now, I mentioned this largely due to the fact that, one, I wanted to show that there was just another bottleneck in the already limited supply of housing. But most importantly, I feel it is very important for us to all understand that each generation has had to go through something substantially different when it comes to housing. For the majority of boomers, when they were buying the majority of their houses, it was through the highest decade of interest rates ever before seen in history. Gen Xers were absolutely destroyed, especially when it came to housing during the global financial crisis. Millennials were just never even able to get a stable footing, especially financially, and largely due to the fact that they now have homes, came from the fact of a global pandemic. And then you come to the fact of Gen Zs. I believe that Gen Zs is one of the most misunderstood generations, largely because there's a very small but loud subsect of us on social media. And I believe that it creates a very large divide between what is actually happening. To further just expand on this matter, because I absolutely do not want it to be seen as I am complaining or anything of that nature, I recently made a video where I was discussing the aspects of consumerism, about what happens if you are continuously buying goods to keep up with appearance. And I mentioned at the end of that video that as I found out that before I went to the hospital for having blood clots in my lungs, I had a realization of two very important things in my life. One of the comments that I received from an older individual was that one of the realizations I should have had was that I needed to move out of my mom's basement at 30. And this was simply because I look young, at least I hope that I do, and that my mom was the one that took me to the hospital. There was never any questions asked. There was no research done. It was just an open statement. And by no means, I am not berating this person. I'm not judging this person. I don't want this. I'm not even trying to make this thing a big deal. What I'm wanting to do is bring a discussion about this, because this conversation could have gone in a multitude of different directions. If we continue to point fingers, berate each other, live lives just with judgment, completely unaware of the situations at hand, what is it that we're doing? We're not getting anywhere. We continuously are not having a discussion. And it is tremendously dangerous if we are being divided amongst ourselves, especially from the generations that should be helping each other the most. This is a time where we absolutely need to be there for each other. We need to learn what it means to be neighbors again. Now, naturally, many of us will begin to think, is the housing market going to crash? And if it does, will it be to the magnitude of the 2008 global financial crisis? The very first thing that we just need to say is that no one actually knows. I think that there's a lot of educated opinions, just like many financial professionals in the stock market. But I think at the end of the day, this housing market, like many other housing markets prior, are very unique. So it's impossible to predict it with 100% certainty. I personally believe that there are a tremendous amount of people that are overly pessimistic, that are wanting things to crash so badly that they may be looking at the positive signs of what is actually going on. However, I believe in the inverse, there are also a large set of individuals that may be wanting the housing market to go up for them to benefit at the sale or purchase of new homes that are overly bullish on the matter. In my unprofessional opinion, I do not believe that there will be a housing crash, at least within the next 5 years. And I also do not think that we are remotely close to a crash of the magnitude of 2008. There's far too much demand for the supply of homes available. There's also a very large subset of people that own their homes outright and have very low interest rate mortgages. So that just naturally is not a concern. I do believe, however, that there are certain factors that should be a cause of concern, but doesn't mean that everything's just going to turn to garbage. I think it's just things that we need to be paying attention to. Naturally, one of them is the global conflict that is happening around us. I think that not only for the economy, that just affects every single aspect of every one of our lives. Another aspect is naturally that we're going into an election. I think that is something that will shake a lot of what it is that we're doing, no matter what outcome happens. Another aspect is we're pricing in the fact that interest rates are going to be dropping because inflation seems to be cooling. I think just to be a balanced investor, you need to consider the fact that inflation will actually ramp back up because the Federal Reserve will cut rates too soon. Not saying that's what's going to happen, but it's worth considering it and putting it as a factor. I also believe the fact that I believe a lot of people are buying their equity appreciation now because I personally believe home prices are far too expensive for what would naturally happen in a free market with supply and demand. I think it's all kind of artificially stimulated. I think if more homes come into the market, I think prices will naturally begin to go down once the supply is met or once the demand is met. Naturally, this makes sense, of course, but the rate that homes are still being bought, I don't see that they will continuously make profits in equity for the next 5, 10, 15 years. I think you will have to hold it through a very large duration of your life for you to actually make a profit on that. And again, these are just my opinions. These are definitely not certain facts. I just wanted to spitball and throw some other things out there to just add other factors of certain situations that could occur. This was a long video. I hope that it was able to provide some sort of value. I know in certain aspects, I got certain things wrong. It was incredibly difficult to find articles that were saying these same things. So I'm not exactly sure why so many different data points were drastically different. I promise that I gave as much research as I possibly could. I spent a tremendous amount of time to make sure that I could get as factually close as possible. If I did get something wrong, please share it in the comment section. That way we can all learn from the mistake. I hope that this provided value to you guys. Thank you so much as always. I hope you have a wonderful day. Bye-bye.
We're not doing so well, Patrick. We need a new approach, a new tactic.
I got it. Let's get naked.
No, let's save that for when we're selling real estate.